Hi traders, this is Forex Nelson and I'm back again today with another training video for my Super Sniper trading system. Today's date is April the 18th and this video will be called How to Trade Pullbacks. Video will be about 30 minutes long. Concept is easy to grasp. All we're waiting for is a move far enough away from the goal line, at which point we're going to measure from the bottom to the goal line, and if there's enough pips, then when you get a buy signal you can buy. Many times it'll be around the London close right here, and so that'll be like a London close and pull back. You have to think of the goal line like a very powerful magnet. Price every day hits it over and over and over and over. You'll see it happen many times. Now of course the daily trade plan obviously is not going to help you a lot in this situation unless the pullback is around this area. So let's say price was way down here, you measure it to there, that's more than 60 pips. And of course, if the daily, the higher time frames are telling you to buy, after it's done a cycle going down, you get buy cycles and signals, then you can trade it back to the goal line and higher up. I'll be showing you plenty of examples both in Forex and of course futures. So the market did a nice move on the way down. This is not breaking the bottom. All we got to do is measure from here to the goal line. That's 50 pips. Soon as you get a buy signal and the TZ is going up, so this is get ready, buy signal here. And I always say, what's the magic word? Wait for a pullback. Happens at least 90% of the time. Does the pullback, if you pull the trigger here, that's your stop, 11 pips. So you're risking 11 to get to the goal line, which is 38. And then of course, if everything is remaining blue down at the bottom, as you can clearly see, when it hits the goal line, you may as well stay in the trade until you see a reason to get out. Now a reason would be is when the TZ indicators at the top is starting to come down and it's turning red, the timing. So anywhere across the top here, that's like 100, up to there is 125. So 100 to 125 pips, manage a trade. Just close it, and like I would be done trading this pullback. Keep in mind that pullback is to the goal line, and if it breaks through and keeps going, that's like a complete reversal. And of course you have another pullback here. This is your pullback. Your signal is right here where it goes red, red, red. TZ is going down. And from there down to there is 23 pips. Keep in mind that at 5 p.m. New York time you have to deal with swap rates. So give it a minute or so past it. Take the trade and grab those 20 or so pips. Also keep in mind that Asian, you're not going to get 100, 200 pips unless there's some kind of high impact news. Once it comes back close to the goal line, and of course you know what to do by now. The move down there was around 23 and the move up to there is close to 50. So it's always better to, as I've told many traders who ask where do I pull the trigger, I always say as close to the goal line as possible. And make those decisions after you've completed your daily trade plan. Daily trade plan obviously has to be after 5, and of course at 7 o'clock is the yen market. Then of course around 9 approximately you've got the Aussie and the New Zealand market. So let's move on to the Euro CAD. Nice huge move down from way back here. London, it's from here down to the bottom. Again, a nice big move. See price action. If you put a line from here to here, it's going down. And of course, on the TZ from here to here is going up. That's called positive divergence. Once you see positive divergence, that's letting me know that it's going to go back up with a potential, for it to hit the goal line and or more. You don't really know what you're going to get. All you can do is measure from here to the goal line. 50 pips. As soon as I see a buy signal right here where this line is. And another thing is, now that I'm thinking about it, yeah, okay. I was just thinking about something different. Remember, when this candle closes, it's a buy signal. You have 1, 2, 3, 4, 5 candles to get in as low as possible. Stop will be around 20 pips. First target is always the goal line. Now you don't close it automatically. Here, if you're happy with 40 pips, close it. And as long as everything remains blue down at the bottom, which it is doing at this time, stay in the trade until it hits this area of resistance, which is same as that, 64 pips. And, that's a good example of how to trade pullbacks. So on this Euro CAD, once we established the fact that we got positive divergence, we got buy signals where this line is. So remember, wait, if price is here, just wait for a bit of a pullback. Stop will be within 20 pips. And your first target is the gold, which is 33. And it did hit the, did grab some quick 60-some pips. Let's just move right along to the Euro Yen. Same thing. Price action made its way down from the London. Once it bottoms out, you get a buy signal. Blue, 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 and the TZ is going up. Get in on any kind of a pullback. Stop will be around 20 pips or so. And your first target is the goal line, 45. And then, you can get around 65 or more, just depending on how long you want to hang on to the trade. Okay, let's move on to the Euro New Zealand. Same thing. You repeat the same thing over and over. Price moves away from the goal line. You're just going to measure 47 pips. And of course, especially if you're daily, when you're close enough to the beginning of, this blue box, New York, if you've got the daily, weekly, let's say it's saying up or buy, once it hits strong enough support, you're going to buy. And, that's 40 pips. Buy signal on this candle. There's another buy signal back here, actually. You can get in as low as possible. That would be a good plan. Hitting the goal line there with almost around 40 pips. And as long as the bulls down at the bottom remain blue, it'll bounce a bit. And it'll then continue to go up. The AO is remaining blue, which signals an up cycle. And it did top out with well over 100 pips. That's like 120 pips. So somewhere as it's going up, you're going to manage a trade. Exactly like what I do. Okay, let's move on to the euro dollar. Same thing, nice move all the way down. London continued. That's as far as it would go. So just measure from here to the goal line. That's 60 pips. And if you get a buy signal, this is get ready. That's your buy signal. Bit of a pullback. Stop is 20 pips. To the goal line is 40. And it did top out with close, around 90 to 100 pips. Not too bad at all. Especially for the euro dollar. Considering the euro dollar average daily range is 82 pips. Okay, moving on to the pound pairs now. Pound Aussie. London does a nice big move up. Look at almost 200 pips. All you're going to do is measure from here down to the goal line. That's well over 100. And many times it'll continue just to keep going down. Once you get a sell signal on this perfect doji right there, get in on the next candle. Now I'm not going to do a 50 pip stop, but I'll keep a close eye on it. As long as the 4 indicators down at the bottom look exactly like this, in other words, red, 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 and the TZ is going down, it really should continue to go to the goal line. And the AO is a lagging indicator, and it's based on the 30-minute higher, a little bit higher time frame compared to the 15 minutes. So you're in the trade and you're going to watch it bouncing around the goal line. And of course, if you're happy with 70 pips, you can be done trading for the day. But if you want to hang around and get more than 70, you can stay in the trade until you get a buy signal, which is right here, blue, 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 and TZ is going up. So that's like, 130, 135 pips, something like that. Excellent example of how to trade pullbacks. Let's move on to the pound CAD. You just repeat the same thing every day. London beginning, going down. New York beginning, going down. Just measure. Let's see. After it's made its move down, the TZ is down at the bottom. You're going to measure from the bottom of the box to the goal line. That's around 40 pips. And of course, you get a buy signal on this candle. So you're going to pull the trigger on these 2 candles with about a 20 pip stop. First target, gold, 23 pips. And it did stall out at this level of resistance with about 40 pips. And that's what the best you could do for this pullback trade. Let's check out the pound Swiss example. Again, another nice move from the London moving up. All you're going to do is measure back to the goal line, 53 pips. So once you start to get sell signals on where this line is, you can get in here or here. There's no right or wrong. You're in, and you're going to monitor it around the goal line. And as long as everything is red down at the bottom and it's bouncing around, the 2 moving average, these 2 are they're all converging. So you can stay in the trade until you get a buy signal, which is right around here. So anywhere from 65 to up to 85. So somewhere in this whole area, you're going to be managing the trade. And whatever makes you happy. And remember to, I don't have it at the moment, but the meter, keep an eye on it. And as it's dropping, the pound, like if it does 100 or more pips as it's going down, the pound will be a bus driver. It might be only 82 or 85%. But it's strong enough to keep it moving downward. Moving right along to the pound yen. Another thing I just noticed, if you're looking at the meter, and if it doesn't look right, you see there's numbers missing. And also, if the box looks out of whack, along with this AO, higher time frame, all you got to do is reapply the template. It'll clear up all the objects, make everything look proper. And the thing that causes interference, just in case you didn't know, is when I put in arrows, like this, for example, arrow up. When I do that, especially if I do 2 or 3 arrows and then change the time frames, it interferes with the meter. Not broken or anything, just reapply the template. And of course, when you reapply Super Sniper, let's see, when you reapply the Super Sniper, it brings everything back to default, like brand new. All the data, everything is correct. Just looking at the meter now, the yen is a bus driver. And it's 2 o'clock in the afternoon as I do this video. So it just goes to show you, you can have a bus driver even when there's market is closed. But do keep in mind that if you have a bus driver at 2 in the afternoon New York time, well, I wouldn't be trading because the market, both these markets are closed. Here we go, pound New Zealand made a move down. And by the way, this is Asian. Thought I'd show you an example in the Asian time frame. Made a move down. Look at from top to bottom altogether is 90 pips. Not too bad for Asian. Once we get to the bottom and we get buy signals right here, you've got this candle to pull the trigger with a 20, 24 pip stop, whatever you're comfortable with. First target is gold, 22. And then of course when it hits this area of resistance, which is around 65 pips. If you can get 65 pips and do one standard lot, that's I don't know exactly what the pound New Zealand pays, but it'll be less than $650. Might be like $600. Okay, moving on to pound dollar. You see, the same thing happens every day. Nothing changes. Market from London makes a push. You're just going to measure from there to the goal line. 28 pips is not a lot, but at this point in time, if my daily trade plan says the daily and the weekly is up, then I'm looking for a buy signal after a move down. Right on the line, that's a buy signal. You can see clearly TZ is going up. So you're going to get in on this candle, wick, or this one. Stop will be about 12 pips. And you're going to stay in the trade until you start to see more red down at the bottom. So as it's bouncing around here at 70 pips, that's a good pip total to be grabbing for this pullback, breakthrough, and reversal. Pretty good move. Let's take a look at another example with this dollar CAD. Nice huge move from London, producing over 100 pips, which is a lot for the dollar CAD. Now once you see wicks and bouncing around, not breaking the top with a blue candle closing on top, soon as you're starting to see the TZ working its way down, timing is red, HA bars turn red, that's your sell signal there. So if you get in on these three candles or here, no right or wrong, and let's see how many pips it is back to the goal line, more than 50, something like 55, and when it hit that, that's 36, and then it's bouncing around and bouncing around close to 60 pips. So I would just be closing out the trade and done trading for the day. Finally, we can move right along to futures. They move the most and pay the most, as you're about to find out. So crude oil pays $10 a tick. Remember, futures ticks and Forex is pips. Nice move from here up to there. London gave a beautiful over like 930 ticks. Every time it comes back to the goal line, you're going to buy, 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 buy. So if I would have missed that, and of course I try not to miss it, once it's topping out, we're getting sell signals down at the bottom right here on this line. Then you're going to wait for the biggest push back up, because that's where your stop's going to be, around 70. Keep in mind that 10 or 20 pips on these futures many times will not hold. And then all of a sudden you're risking 70, hit the goal line with 460, huge return, And it did bottom out with well over 900. And if you take 900 times $10, that is a lot, $9,000, a lot of money. Had to think twice there for a moment, because you include all the digits. Magic number. Now the market doesn't normally move on oil. This example's moving a lot, but if you can get 500 times $10, your account will double in one trade if you're pulling the trigger with maximum lots that your account will allow. Keep that in mind. But you better be on the right side of the trade, because just as easy as you can make a lot, you can lose a lot. Okay, let's run a check on the DAX 30. Nice move on the way down, bouncing around with lots of wicks. Just measure. That's around 900, and you're going to include every digit. So once it's far enough away from the goal line and you get a buy signal, right where the line is here, you have these two candles to get in on. As you can see, if you pull the trigger there, it didn't even go one tick against you. To the goal line is over 500. And it did top out. Oh, by the way, if you want to double your account, the magic number is 1, 3, 3, 4. Well, by the time it hits that, your account has been doubled if you did maximum lots that your account will allow you to trade. That actually was 1,400. If you want to know what that pays out, you take 1,400 times $3.75 if you do one standard lot. And that is more than doubling your account. Lots of money to be made, but you have to be on the right side of the trade. You don't want to be selling. And why on earth would you be selling when everything down at the bottom is blue? Made the system easy. Blue we're buying and red we're selling. And you can actually drop it down to the 5 minutes if you're a big fan of scalping. Wow, look at this move over here. London. Keep in mind that DAX 30 closes in the afternoon at 3:45. It remains closed for many, many hours until the next day, till 2 in the morning. See? 2 down at the bottom. Market opens just in time for London. Wait for the pullback. You're in. And that almost doubled your account right there. If you get in the habit of pulling the trigger around the goal line, you're going to have a lot of winners. Keep that in mind. Dow Jones. Wow, look at that nice move down. How much was that? Well over 500. Not too bad. So once it's stabilizing, you can see from here going down, from here on the TZ going up. As soon as you get a buy signal right on this candle, look down at the bottom. Everything is blue. Get in on the next candle. Target is goal line. It's 15, 28, and it did top out with about 40. So if you do 40 times 5, because that's all it pays, 40 times 5. Well, if you did one standard lot, $2,000, it's not too bad. Just paper trade these futures, depending on your lot size. Make notes and you'll know exactly what the payouts are. Gold is the next one. Remember, gold is $10 a pip. Nice move from the London up. 360. Not going any higher. We have sell signals on the line here, here, and here. What do I always say? Wait for the pullback. You got 3 candles to get in on. Stop will be 93. Keep in mind that at 10 or 20 pips or ticks, not recommended. But when you do pull the trigger, hang tight, keep an eye on it, see what's happening around the goal line. That's close to 200. That's 440. Went sideways for a few hours, and it finally tanked for, 86, approximately, of course, times $10. That would be $8,600 if you did one standard lot. Moving on to NASDAQ, another one you can double your account with, and it does pay $20 a tick. Nice move up all the way from the London. Nice move. Let's see. 250. By the way, that's the magic number you need to double your account. 250. For me, getting in here or here also will be great for 170. You do remove the last two digits. Now once you see price not going any higher, and you're getting some red, and the full-blown sell signal is right here, so please don't wait until you get everything in order. But once I see this red, I wait. I get in as high as possible because that's where the stop is. If you got in here, your stop is 38 ticks. Target is gold. It's 114. And it did max out with about 160. Times 2, that would be $3,200 if you did one standard lot. And just as quickly as it went up over here, it went back down, and then it went back up again. Holy cow, look at that. That's like, again, you could have doubled your account with 258. Fantastic. Trading the NASDAQ. Be careful with it because it does move a lot, pays a lot. And this was an excellent example of how to trade pullbacks. Here we go. Russell, another one you can double your account with. It does pay $10 a tick. Nice move from the London up. Huge move. Once you see price stalling out, just measure. It's over 300. When you get a sell signal, the beginning, that's your sell signal. Next candle, get in as high as possible with a 74 pips stop. You're going to monitor it around the goal line at 255. And then it finally kept going and going over 400, 500, and eventually 600. But I would just grab X number of pips, and when I'm happy, I just close out the trades and be done trading for the day. Okay, let's move on to S&P 500. This one pays $5 a tick. Nice, huge move up of about 980, a lot. By the way, if it ever hits 100 times $5, that's the number you need if you want to double your account. It does happen from time to time, but not daily. Once I see the pullback here to the goal line, definitely can trade that for around 480. But once the AO turning red, we're getting sell signals down at the bottom. So you can certainly make the move up. Once it stalls out, get a red candle dropping here. Look at all the red. I want to see at least, well, the bars. 1, 2, 3, 4. If I can get 3 of these bars red, which I have right there. 1, 2, 3. Next candle, you can get in. Stop is 206. Gold is 220. And it just kept going and going and going. And for at least 700. So I can do the math. 7 times 5. That represents $3,500. Moving right along to silver. Silver pays $50 a tick. Look at this nice move up. Big move up. Huge. London getting in here. New York getting in on these 3 candles. Certainly catch this. Nothing wrong with grabbing 100. 100 times 50. Well, that's $5,000. You would double your account with 100. Once you see, and of course it's very easy to see, used to put a box in here. Well, let's go from here down to here. There's no right or wrong, just put in a box. If a blue candle doesn't close above here, get in. Inside the box, that's your stop, 12. You're risking 12, you want to go back to the gold, which is 60 with a potential 80. And if you do 80 times 50, 8 times 5 is 4. That represents $4,000 if you did one standard lot. I'm repeating things over and over dozens and dozens of times because I've learned with my other trading buddies. I would tell them hundreds of times, and they would be buying right here. And then I would say, why did you buy there? Too far from the goal line. Get a sell signal, sell. Don't make trading difficult. It's easy once you understand, the flow of the market, ups and downs. Price action around the goal line is always the best. 30-year bonds, last one, made a move down. Price going down, TZ is going up, that's positive divergence. Waiting for a buy signal right on the line. You can get in on these candles with 13 pip stop, target 40. Next target, this area of resistance, which is about, let's say 90 times 5. This is only $450, but the 30-year bonds doesn't move a lot, and it doesn't pay a lot, $5. Definite time to wrap up this video. We're at 32 minutes. If you have any questions whatsoever, just get in contact with me, and if not, good luck with your trading, and we'll see you in the next video.